Morning everybody, welcome to Stockradar, Stocks on the Move for another week. Today's date is the 15th of September 2022. Today I want to talk a little bit about market breadth and give you a bit of perspective from the market, where we are now, where we've been over the last year, and what are the opportunities, which stocks now we can look at for buying. Okay, so first I want to go straight into the markets, and we see the Dow Jones. We looked at it last week. We saw the pressure coming from that resistance area, and it's now failing down there. So we're still looking for this area here. The volume really has been suggesting we've got further downside below the average, and momentum's weak as well. So that's sort of really in the market is down, trending down, and that's so we expect lower price at the moment. And Nasdaq is similar. Again, we failed at this area. Some big resistance turning up around this area here, and S1 is now a target down around 10,798. Which is the recent low. So that's what we're looking like for the overseas market. So I'm sorry that's not good news for our market at the moment, although we're a little bit better with some of our commodities doing a bit better. Dr. Copper is still correcting that big move up. How much further we've got down to go? We've got some fairly heavy activity on both sides of the market over here, so we might be seeing a little bit of support around here to hold that commodity. Gold, don't be complacent. We're back down to these lows again, and we don't want to see it really fall through here. If it does fall through, then we could be in for a little bit of a disaster. The US dollar is very strong at the moment, putting a lot of pressure on gold. So just watch that area, especially if you're in the gold stocks, which I hope you're not, because they have been going down and they're not looking like they're going to go up anytime soon. So just hold your fire on that one for a second. Crude's holding pretty well. It's sort of easing back to that S2 area here. Nothing really savage. We're heading into the northern winter, which is always a good demand time for oil, or whatever's happening in the oil market. People want energy. So I feel there's going to be a bit of support for crude. I don't know how far down we're going to go. Momentum's turned neutral. Volume hasn't been that heavy. So we'll sort of just hold our fire on that one. We've got a few stock picks in the energy market, and we have had for a while, so we'll probably hang on to those until told otherwise. Okay, now we want to go to the XJO, which has also hit resistance, like the overseas markets, come down a bit. We've had some big ranges the last couple of weeks, both downside and upside, so there's a bit of support there, but generally the trend is down, so we're probably looking for this retest of S1, I'm sorry to say. And momentum is still negative there, so if I just blow the chart up so you can have a quick look at it as to how it looks, really, you've got big top here, big resistance here. It's failed there basically and come back down here. So it's not looking all that fantastic. If we go to our stock pick count, this is what's been telling us for a while. The stock pick count tells us there are only, this week, 25 stocks trending high of 162 stocks covered. Market breadth is weak. And I'm going to show you the Stockradar stock pick count, or the Stockradar index against the All Orders a bit later on. So you can just see what's actually happened there. But we've been very, very negative here. There's been very, very little breadth in the market. We've seen some utility stocks have a run. We've seen some energy stocks have a run, but not a lot else. I mean, computer share and a couple of other isolated instances, but not a lot there. So we're left with, at the moment, we actually had a couple of miners last week, which are doing well today. So the stock pick portfolio is up 3 to 25 now of 162 cover. So we're still only 14% equities and 86% cash, which is roughly like the conservative portfolio, which pretty well reflects that basic membership. So the basic membership really does give you an idea of the market breadth at the moment and where the opportunities are, and the portfolio is a different thing. So conservative is actually down one this week to 4 stocks of 20. So we've only got 20% equities, 80% cash. The Energizer is full still. The Energizer 10 is down 1 to 9. So they're still fairly cranked up there with some energy stocks and computer share and a few stocks that are actually doing reasonably well. So that's what the stock pick count looks like at the moment. So, and energy is the only stock, the only sector in positive territory on the trend intensity ratings. Everything else is negative, and we've seen the banks being negative. So they're all dragging on the market. Even the stocks like BHP and Rio that you would think at some stage with commodities on the boil would have to have a go, and I think they probably will, but for the moment they're not in demand and there's not a lot of volume there showing us that. So holding our fire on that one for the moment. Okay, so now let's get into extra sensitive stocks. Okay, AP Eagers is our first one. I promised this last week because it is an interesting stock, AP Eagers. And if I just get the indicators up on there, I'm going to restore this panel. Right, okay, so we're mapping out possibly a trend reversal. The reason I say that is because the trend intensity rating is -4, so it's getting towards neutral. But we've had a big downtrend here, and we've had this big rally here, but it's also been in very good volume. And I've seen a couple of stocks like this, and it really makes me sit up and think when I get this demand here, which is good. We might be having a little bit of an ease back here, but we're starting to map out the potential for a trend reversal here. So we can watch this one as it develops. Again, we don't want to get too excited because we've had a lot of disappointments over recent times, but we're either going to get a new high above here or we're going to get a trend reversal pattern here. So we don't want to anticipate, we want certainty, which is what I want. We've got great volume here, and this is getting back to neutral, so the wheels are turning in favour of AP Eagers. There's another one I promised you last week, which was Insignia, or the old IOOF, which has been going down for a long time. But, I always like to watch some of these stocks because they do provide good opportunities, especially when they're in the low of the cycle. So Insignia, nobody really likes this and hasn't really liked it for quite some time. It's undergone some changes. Lots of things have happened, but we've just now seen this bottoming pattern which is starting to develop here. We had a cycle, we had a hit a low here back in 2020. We've had the cycle low tested 1, 2, twice, and we've rallied off again. Again, what I've liked is I've seen this good volume here, which has been very good, and this is easing back towards neutral. So a long way off a trend reversal here. People like to buy lows. It's probably a good opportunity, low risk opportunity, but I'll wait for some sort of indication of a trend reversal to happen here for me, because I'm very conservative. Okay, so I'm just looking to the future on this one. This one looks interesting. We're at a low. We've got some buying in this situation here, so it may well map out an opportunity for us soon. Okay, the other one I did promise you last week, and it looks very interesting again, is ResMed, which has had a tough time of late, like a lot of these health stocks, which nobody seems to want at the moment. They're sort of what were the darlings are sort of the hated ones at the moment. We've got ResMed, trend intensity rating is -3. It came back to this support area we saw a good rally. Again, some of these stocks, look down here, look at this demand. It's undeniable. This is just fact, okay? So I'm not sort of trying to predict or look at things that look through a crystal ball. I'm just saying this is what's happened, which is what I do. I report the facts, and that's all I report to you. So we've got a good rally on good volume here. We have the potential for a trend change here. This has turned positive, so our trend intensity rating has moved up to -3. That gives me perspective on what we're looking at the trend intensity rating, okay? So we now look like we're getting a close above the reversal this week, possibly. I know the market's probably a little bit better today, not a lot better, but we've got another day to go next week, tomorrow. So we'll just see how this goes, but maybe ResMed is finally going to get back on the boil and have a shot back at $40. So we'll keep an eye on that one for you because it does look interesting. Okay, as far as new highs go, Whitehaven Coal, I just thought I'd mention this again. It's been a great stock and it's made a lot of money for us recently, but this is an important area when it gets up to a new high. Now I know it's gone up a long way, but it can still go up a long way because that's what stocks do. We looked at things like Computershare and some of these stocks that have gone up well, and even in this market it's not really a great time for stocks. We've only got 25 stocks trending up out of 162, so there's not a lot of breadth there, but the ones that are, we shoot for those, and that's what we go for. And Whitehaven Coal is still making new highs, and it's coal stock. It's an energy stock, and coal's in demand, and it looks like it's going to be in demand for a while because prices are really high. So it's all positive for Whitehaven. Another one we cover is New Hope, which is also making new highs above the 2019 high of 650. Its trend intensity rating is 10, and it's making new highs. So it's an interesting one as well, New Hope Coal, if you're looking at that one. Nanosonics is the one that we're following at the moment, which we like to do. It is mapping out this trend reversal pattern. It's almost so perfect. I'm getting a bit nervous about this, but it's really come back nicely here. So this is a good correction, but what I really want to see now is these buyers come in here and start supporting this correction if we're going to really see a good trend reversal. This is all the changing shape of a trend reversal. So it's looking okay. It's mapping it out. The market's had a little bit of a bump down. If it continues to go down, it may struggle, but if it doesn't, we'll see. Anyway, we've got a bit of volume here, a bit of selling, so that's a good challenge for the market. I always like that sort of thing. And this is eased back towards neutral area, so Nanosonics still we're watching. Okay, one stock I'm just going to look for outside my 162 cover, which I like to do every now and then. In the newsletter last month, I talked about the engineering stocks, and mining services stocks, and some great great moves are happening in this area. So this one here is called Lycopodium, and it's now just made a big high, 2-year high above 620, and it's rallying well. Bit of volume here. It's a bit thin because, again, these smaller stocks are harder to read, so I'm always be careful about that. But it does look quite good to me, and it is making some new highs there. We've got a great demand line coming through here. It's now broken this 1, 2, 3, 4 highs there, and is going up. And the market has been pretty well sideways for the last year, so this is going against the trend. So this is a little bit, the mining sector is a really interesting sector to me, and I'm going to look at South 32 next week, which is another one with some volume going through there. Some stocks aren't looking that good, but I think there will be a movement there, and some of these support stocks are looking very interesting. So have a look at some of the other ones. There's, I can't remember them all at the moment, but some of those mining stocks are looking quite interesting. Okay, so that's like Lycopodium. I can't quite get my head around that one, mouth around that one. Trend intensity rating is 10, and it is going up. One of the few stocks that are. Okay, on the internet side of things, we know that Nasdaq is going down, and a lot of our stocks are going down. Seek's near its low and things like that. But car sales has, again, I look at things at face value. I don't try and wonder what's happening, or look at top-down stuff. I just look at the stocks themselves. And again, when I look at car sales here, so let me just get this in the centre here. We look at car sales here, and we look at the volume that's gone through on this recent rally here. From this correction down, we look at this volume. This is serious volume. This is serious buying, which is not going to go away. And probably if we get more of a pullback, will be some more buying. So we've got the MACD is turning positive. Volume is great. I've now got a point to target here as a potential reversal level. We'll have to wait and see exactly. But trend intensity now has moved up to -4, almost into neutral territory. So car sales is one that is looking interesting for me as well at the moment. Okay, so they're the stocks I'm going to go through today. Next week I'll look at South 32, and I'm also going to look at Paladin. Some of these nuclear or uranium stocks, if you like, are looking interesting, so I will have a look at that one for you. Okay, so let's go down to trading tactics now, favourite little section, and talking about what's been going on in the market and what the reality is. So here is the ASX 200 against my stock pick count, or my Stockradar index as I call it. So the above we saw before tells a story of a real market perspective, which is that we only have 25 stocks of 162 going up. Now, this has been the case since roughly September last year. Okay, so this is when the stock pick count fell off a cliff before the market did, but the market has been struggling for quite some time, and our stock pick count has just remained low because stocks haven't been going up. And that's how it works really. So that gives me a really good guide, and often has. I've got this back to about 2003. It gives me a very good guide of when these divergences happen. The index is a bit more volatile than the ASX 200, but still the relationship is still very good. So, the Stockradar index is a very good measure of where the market is, and at 25 of 162, that's what we're talking about at the moment. So that's just a snapshot of the index and how it looks. Okay, I've got two portfolio types: a conservative portfolio, which reflects the breadth of the market, which my basic membership does as well. So they're pretty well in line, those two, okay? Then I've got the energizer, which is always geared to capturing uptrends, and it's aggressive. And it is, the 5 stock is full now, and the 10 stock has only got 9 stocks, but it's almost full. And we know the 5 stock is the best performer. It's more volatile, but the upside more than compensates for correction. So this is what the portfolios do, and this is what they're aimed at, okay? So I'm always being aggressive. So, you've got to make sure your profile fits what you're doing here. And if you want to be aggressive, and even over the last 12 months, we have found it quite tough. We've had a couple of winners in there, some of the energy stocks, Computer Share. There's been a couple of other ones in there that have kept the portfolio running. But it's tough. But when the market takes off, the energizer, it just goes through the roof, and that's what we'll be expecting to happen when the market does go up. So by following the conservative strategy, it reflects the breadth of the market, and it matches the market, or the ASX 200 accumulation index. I don't measure myself against the ASX 200. I measure myself against the accumulation index, because that includes dividends, and my portfolios are always reinvesting the dividends all the time, okay, and reinvesting cash. So the compound annual growth rate of the accumulation index at the moment is 8.5%. That's since March 2003, okay? And you can see the accumulation index and the conservative index, they're roughly the same down here. But then you look at the 5 stock energizer, and it's aggressive, always geared to trends. Now, the GFC is back in here somewhere, okay? And that's what it looks like. This is COVID. This will start to look like this at some stage, because at some stage this market will get on its bike again and go up, because the long-term trend of the stock market for the last 100 years has been up, okay? We're going through a corrective phase at the moment, but it will correct. So this is what we really want to do. This is what the strategy of Stockradar is to be aggressive and look at these and make money, basically. So you can just see it's a very clear picture there for you to see the market against the index, okay? Okay, so total control of what I do is exactly what I do, because I can't control whether I don't know whether the market's going to be tomorrow, stocks are going to be tomorrow, but I know what I am going to do in response, because I have a strategy to capitalise on how the market works. Okay, so the market will never change, but you can. Okay, once you've made that change to start responding and being in control of what you do, not letting the market control you, you will start to make money. And that's how it works. So don't chop your branch off on the wrong side. Make sure you get it on the right side. That's where you've got to make the change, because it's a very hard to control. It's a silly thing to do, but you must do it. And don't let those emotions drive you. Don't let that, I think this is going to go up. So be very, very careful about that. Okay, so just to finish off here, ASX stocks, which stocks now? Well, it's really hard, but realistically, energy and coal is where it's been. I don't predict the market. I just follow the trends. That's all I really do. So where will the next trends come from? Well, I'm looking at some insurance stocks. I'm looking at a few mining services stocks that are looking potentially interesting, whether it be QBE or AAG. Maybe they're dirty words to you, but they're also opportunities, and often the downtrodden are the ones that rise up. So remember, we don't follow trends. We follow trends. We don't predict. Okay, so I'm just following things, and that's all I really do, and that's how we make our money. So which stocks now? There you are. Keep to your ones that you know. Don't try and anticipate what's going to happen. Is BHP going to go high? Well, at the moment it's not, so be careful. Okay, so take the market at face value and use your common sense. Okay, the stock market is about common sense and making sure. Most of the people that I deal with, I will find that if I have female traders are far more poised and far more sensible than the males, who are far more gung-ho and aggressive. And it's a very interesting situation that I see out there. So I listen to my female members quite often, because they're really quite poised. So use your common sense. Develop the ability to see the price action rather than wish it. See the price action for what it is, okay? So it's tough right now, but that is the reality. Things will change, as they always do. Being selective is always the best approach, and our basic Stockradar membership identifies those trending stocks for you. The 25 stocks there are there for you to see, and the ones that are going up, okay, or ones that have just entered, okay? And the 3 miners that we entered earlier this week are doing quite well. So remember, the market won't change, but you can. Okay, that's the important thing. So develop those skills along those lines. Okay, well, that's it for the week. I hope you enjoyed that. Nice to speak to you again. I'm away for a couple of weeks, back up in Queensland, getting a bit of warmth, so I still will be up there, and I'll be coming to you on next Thursday. So I look forward to that, and who knows what the market will bring. So get educated, stay safe, watch your trends, heed your stops, and I'll see you all next week. Thanks very much.